Hello, everybody, and thank you for joining us tonight. My name is TJ, and I am a rising second year MBA student at Fuqua School, as well as a member of the COLE class of 2020. This is a COLE's Leading Through Challenges conversation. This session is in partnership with Business Oriented Women, Student Affairs, Fuqua's Office of Community Engagement and Inclusion, the Fuqua MBA Association, Duke's Master in Engineering Management, and the Baldwin Scholars. It is my great honor today to welcome with us Mr. Daniel Bassichis, our guest speaker for this evening. Daniel is a Fuqua MBA alum, and he has a bachelor's in accounting. After business school, Daniel spent almost 3 years in investment banking at Goldman Sachs, focusing on real estate, gaming, and lodging. A mission-driven business leader, Daniel co-founded Admiral Capital and helped to combine Admiral's interest in private equity and its desire to make a positive social impact with the overall goal of creating a long-term sustainable business. Based on Daniel's experiences at the intersection of private equity and social impact, we are excited to discuss purpose and seeing possibilities, the impacts of commitment, empathy, and integrity on business decision-making, and how we as future leaders should prepare to lead ourselves and our teams through tough times such as we are in today. Daniel will give a brief overview of Admiral Capital, and then he'll respond to questions from Sanyin and myself, and then we'll open it up to the Q&A session. So like Sanyin said previously, kindly write down your questions in the chat box. So Daniel, thanks again for being here with us. We appreciate you sharing your time with us today, even though you have a birthday party to be at. Can you please share with us a quick overview of Admiral Capital and how you all got to be in business till today?
Certainly, and I have a lot of work to do to live up to that introduction. I appreciate that. So it all comes back to actually my time at Fuqua in 2002 to 2004, where I was a classmate of Ed McGee, who's now at Fender. And Ed was good friends with my current business partner, David Robinson, at the Naval Academy. And we created a class project while at Duke to help David, who spent a lot of his career supporting education in low-income families. We wanted to help him scale up his work and make it more sustainable. So that became a class project for us while at Duke. And then I became very passionate about helping him. And while I was at Goldman, he put me on the board of his foundation and of the school and helped him build an endowment. Eventually, we converted it into a charter school. And after a few years, we started talking about how can we combine our interests. David was so focused on building schools and helping families. I was focused on real estate and private equity, but I was getting more and more passionate about David's work. And so we decided, let's build a business together that would invest, create profits for investors, but take 10% of our profits to fund all of the work that David was doing. And then also try to think about how can we use all of our investments to also help low-income families and help support education. So we started in 2007 and 8, left Goldman, of course, hit a recession days after I left a nice stable job. And it really took us about 3 years to get off the ground and raise our first fund. So 2010 and 11 raised a $115 million fund to invest in real estate. We bought apartments, office buildings, hotels, shopping centers. Then we raised the second fund of $125 million. And now we're kind of scaling up the real estate business. We have also moved into private equity, investing in sports, entertainment, hospitality, education, and defense companies. And happy to chat more about some of those things. We've acquired over $1.5 billion worth of real estate. We've invested over $400 million of equity. We've bought over 55 properties, very focused on multifamily. But everything we do has the same mission. Anything we invest in, let's take a portion of those profits. Let's increase diversity, let's open doors, let's create opportunities, let's bring the right people together to think about how can we use those properties or those companies to help people. So we've tried to balance both building a business, generating profits, while also focusing on the impact side. So that's where we are today.
Thank you, David. So it goes without saying that your purpose was formed and merged out of your business interests and David's intention to do good for the community. And over time, your interests kind of merged and, there were bloodlines, and then you have what you have today in Admiral Capital. Thank you for that introduction. Sanyin, I'm sure has some questions for you at this point. So over to you, Sanyin.
So Daniel, listening to you chart out that timeline, in hindsight, it was like an easy decision. But let's take it to that point. You had a nice cushy job at Goldman. You were hitting it all at the ballpark. And then here's, and you didn't know the recession was going to be around the corner, right? 2008. And most of us don't like change. So when I hear about someone who rushed into that change on their own volition, right? That's really interesting. So take us through that process in your mind. Why would you leave something that was a sure thing to go do something that was an unknown? What were some of the things that compelled you? What drove you to say, yes, let's do this?
Yeah, and it definitely, it wasn't a very quick decision. First of all, I guess I am, or I'm willing to take risks generally. And if you're going to invest, you have to take calculated risks. But it was, 5 years of helping David build an endowment and coming and visiting the school and seeing the impact he was having. So over those years, I knew that I wanted that to be a part of my life. And so I became more and more passionate about that work and felt like the next chapter needed to incorporate some of that work. So we started working on a business plan. We spent a few months mapping it all out. And then it became the right time, at least I thought the right time, to jump ship and start to build the business. But it was definitely years in the making, years of building the relationship, years of getting involved in the school, seeing the impact, and realizing that's something that I want to be doing for the rest of my life.
Listening to you, a lot of times people think the business and the profit is the end goal. But listening to you, it seems almost like the mission of making impact, the education mission, the business is almost just a tool to get to that end goal. Is that a right way to think about it?
I think that's right. And it is the mission that drives us, but we know we can't accomplish the mission unless the business is successful. And so we need to generate returns. We need to stay focused, and we can't compromise that. So we don't want investors thinking we are compromising that, because if we're going to continue to raise hundreds of millions of dollars and build a successful business so that we can take a portion of the profits to do good things, the business has to stand on its own. And in fact, we kind of start behind the curve in a lot of our conversations with big pension funds, endowments, foundations, family offices. As we're raising money, they know what David Robinson stands for. He's, gave away $10 million to open this school. He's the role model for professional athletes. He served in the military. They kind of assume David is only about education and impact. But we're then asking them to give us $5 or $10 million for us to invest. And so we need to convince them it's not just about the impact. That's a byproduct. And the better we do, the more good we can do. But you're investing in a business that's focused on returns. But what motivates us, and I think what attracts our team and the people that we have on our team also buy into the mission. They're not choosing to go work at a top tier firm, Goldman or Blackstone or BlackRock or someplace else. They would like to work at a firm that has this social impact component. And I think that's what drives the team as well. It actually took us some time. I think we've had iterations of the team. It's not just hiring the smartest real estate people. To build the right culture, it's hiring smart real estate people that also have the same compassion and desire to make this impact, because it's every decision we make when we're renovating an apartment complex or negotiating a rent with a tenant or thinking about how can we help the tenants, we want people to be thinking that same way. Especially during the pandemic, our tenants, we have 15,000 apartments. Our tenants are struggling over the last few months. So how can we help those tenants, get food, or how can we support low-income families around the properties? We want our team always thinking about those things as well. So the mission is what drives us, and I think attracts the right team. And I think our investors ultimately like it, but the returns are what's going to kind of build and scale the business.
One last question before I turn over to TJ along your life. So we have, college students MBA students here. I know we've talked, so you have no regrets on the decisions that you made. What advice do you give them in terms of when we're all at this crossroads all the time, in terms of what do we base our decisions on that will lead to that meaningful and in a way regret-free type of career?
Yeah, I think it's not forgetting your priorities and always thinking about them and maybe adjusting them. And I feel like over the last 4 months, even for myself personally and everyone I'm talking to, it is a time to rethink everything in your life. And so we had a very long journey, and it took us a few years with making almost no money, another few years of building the track record, and it's finally getting to a point where we're scaling. But for me, priorities are not only the impact side, but my family and having the flexibility to be there for I have 14 and 15-year-old daughters, and to be there for them for every sporting event, anything going on at school. And it's not easy to do that at a larger firm. And so I guess I don't have any regrets because I have 100% flexibility. I love what I'm doing, and we're trying to do something very unique and that we're passionate about. So if those are your priorities, then I would say find a way to incorporate that into the work, even if it's making a sacrifice, because it's hard to make as much money as you could while also having time for your family and also doing things you're passionate about. It's okay. You might not need that much to live. So if you're going to look back over 10 or 20 years, you have to love what you're doing, and that's what you're going to have to get up in the morning and be excited about it, or else you'll be miserable going to work. And that's not what it's about. And that's why it was easy. I actually love the people I worked with at Goldman, and they're still some of my best friends today. But when I looked around and I thought 10 or 20 years down the line, is that what I want to be doing? And it was exciting, but I knew that maybe for 90 or 95% of the world, that might be. But I knew for me, I wanted to do something different. So I almost from the day I got there, I knew I would. It was getting the education, building the network, building the credentials, and then when's the right time for me to leave and do something else?
Thank you, David. So
Dave is my partner. He's much taller than me.
All right. So thank you, Daniel. I'm sorry. So your responses show that there's a lot of purpose and intentionality that goes into your decision-making processes, right? So I have my first question for you before I take a couple of other questions on the chat boxes. Have you had business opportunities that you've had to shy away from just because it doesn't align with your purpose?
Almost every week. And I think that's the difference between building something that you think is going to be kind of your life. This business is, I hope, the rest of my life. It's been 12 years, and I hope it's going to be the next 20 or 30 years. And everything we're doing is building the brand, building the reputation, building the track record, building trust. And there is no amount of money that we could earn that if that compromised everything we're building, we can never make up for that. So it happens a lot. We know what we stand for. We're here to build a business that's going to help support education and help families. So if we get involved in a real estate business that might be aggressively evicting people or hurting families, or we've had opportunities to get involved in casinos, or there's lots of aspects of real estate that might compromise our brand. And so that's often a conversation. Is this the right thing for us to be doing? And then we have to pass on those, regardless of how much we can make from that. It's not like we can, we're a big corporation and have subsidiaries or something. I mean, we have our brand, and even for David Robinson as a individual, he spent 25 years living his life a certain way, serving in the military, building schools, being the role model for athletes. He's always felt it takes years to build that reputation. It could take seconds to lose it. And so we have to do the same thing as a business. Our business is kind of built around his brand.
Right. Yeah, thanks, Daniel. So, the takeaway from that is just that integrity and commitment takes a long while to build. And it's been one of the mainstays of your business today. So my second question is that, you have a successful business that spans education and real estate, and you're able to attract a certain type of investors who share a common trait of a strong work ethic, intellectual curiosity, and strong community engagement. But I think it's a two-way street, right? You're assessing these investors for their partnership, and they're assessing you as well. Apart from, commitment and integrity, what other things, what other virtues, what other values do you think that these investors see in you that make them have the commitment, to be a partner with you in the business?
Yeah, we know there are hundreds of other real estate funds out there. And why are people, if they could choose us or Blackstone or Carlyle Group, why take a risk on a smaller group? I think a lot of our investors do appreciate, number one, because we're smaller, we can build one-on-one relationships and have alignment of interest and have full transparency. So I think because our business has a certain reputation, we want to treat our investors a certain way. So we started the business with friends and family. And that group of friends and family has grown from 10 people up to hundreds and hundreds of people. But we've never changed the way we treat people in terms of the way we communicate, especially during COVID. We are now sending weekly or bi-weekly emails about rent collections and rent deferral and what's happening at shopping centers and office buildings and apartment complexes. How do we navigate these times? So treating people with respect, with full transparency and alignment of interest so that they know, things could go wrong in our business, in an investment, at a property, but they know we're fully aligned. And I think that's what we've built our business around, that they trust that we have skin in the game with them. So I think it's the transparency, it's the mission, but it's also, we're only going to do well if they do well. We're not doing well if things don't perform. That's what we've kind of built everything around.
So something that resonates with me with your response is that, I've read it severally that people can forget what you tell them, but they'll never forget how you make them feel. So my takeaway from that is that your clients, your investors, and your beneficiaries of your business, they feel very good. They feel very confident and very comfortable doing business with you. And that kind of helps with the going concern of the business. I will take a question from one of my colleagues here. It says, how do you measure social impact? How do you measure the social impact your firm generates? Is it something you track and relate to your investors?
Yep. So that's a great question. And it's, I'd say, constantly evolving. So in the beginning, the impact was driven by how many dollars could we generate to build the endowment for David's school, and because that was why we started the business. So I would say the measurement early on was helping scale up the school, building an endowment. Then at the school, we would then measure, of course, test scores, how many kids are going to college, graduating from college. So we would measure the results of the school, but as a business, it was measuring how much support we could have. Then it evolved into, when we converted David's school from a private faith-based school to a charter school, that it became more self-sustainable. And we could then take our profits and start supporting education in other cities. So then, for example, we bought a hotel in Houston, a Hilton Garden Inn, and we created an internship program with the University of Houston's Hilton College, the Houston Independent School District, and Hilton Hotels to use our hotel as a place for kids to come for internships and help open high school kids, teach them about hospitality jobs, help them get into college. So in that case, it was tracking those kids and are they interested in hospitality? Are they getting into college? Now, we have a lot of examples like that. But now I think what we're rethinking, and I'll keep the answer short, but the next piece of our business will be, instead of just investing in apartment complexes, office buildings, and separately taking a portion of the profits to fund all the community work, we want to weave the social mission into the investment strategy a little bit more, because what we've realized is oftentimes if we are buying an apartment complex, renovating the apartments and putting in granite and stainless and then we're selling it a few years later. We're not really creating the community that we'd like. And so the next piece will be another vehicle to buy apartment complexes where we can have after-school tutoring and fitness and workforce development and healthcare. So that will be a whole nother level of screening. Are we generating the returns, and are we helping the tenants? So long answer, but we've been doing a lot of things, and we try to measure kind of the dollars we're able to give away and how impactful are those dollars. Hopefully that answers the question.
So that's been a lot of evolution in 12 years, I'll say.
Wait, sorry, what was that?
I said that's been a lot of evolution in 12 years, you know, in terms of how you track.
Yeah, and in each, I mean, I think what's interesting, I mean, we even just invested in a talent agency, United Talent Agency, which represents Angelina Jolie and Will Ferrell and Kevin Hart, but we invested in them so that they could then buy a sports agency, and they bought Clutch Sports, which represents LeBron James and Anthony Davis and John Wall, a few others. But together, we're now having the discussion of what can we do with that company to have internships and increase diversity. And I think that's just part of the dialogue in every investment we're making. How do we work together? How do we collaborate? And certainly over the last couple of months, it feels like everyone is a lot more open to those conversations and collaborating.
Thank you, Daniel. So Linda wants to know, how do you effectively screen for goals and missions in the hiring process, given that they're harder to measure and benchmark compared to performance-based outcomes?
Screening for goals that kind of alignment with our mission?
Yes.
Yeah. I think what we've learned is, some people might come and say, we looked at your website and it's great that you're trying to make an impact. We love that. But I think if someone really believes in that they'll have something that they're passionate about that they can talk to. And they're either involved in a mentoring program, they're on the board of a school. Even, it doesn't matter at what level. If you've committed some of your time and shown that that's your passion, then that will come out in the interview. And if I see that at the bottom, and even if it's, a long resume, but at the bottom it says involved in the Boys and Girls Club in a certain city, I'll bring that up and see where does that conversation go. And I think the last few people we've added to the team, that was, half the interview. And you can tell is it authentic and genuine? Is that something they care about or not?
So I can see that the team dynamic is really important in how, you attract investors. Do you have any examples of any single sports investors, that are not necessarily team? Because I refer to an interview, I think that David might have given about, just the team dynamic being very important in how y'all approach the business. So is it a prerequisite to be an ex-team sport member, or, can somebody who swims, for example, single sport, be an investor with you guys?
Well, in both, I guess, if you're asking about the investors or the team on the Admiral team, certainly our team happens to have a few former tennis or swimmer or others, but I'd say half and half. The investors I'd say maybe less than 10% of our investors are, professional athletes or former professional athletes. It's pension funds, endowments, foundations, CEOs of tech companies, oil and gas people. So now I find it, for me, I like spending a lot of my time, and especially as you've set up these calls during the pandemic, we've also done the same, where we have a weekly Zoom call where we invite a CEO of a company to speak to a group of professional athletes that we bring together. It's 20 or 25 people per week of people that are interested in business and community. And so I think there is where we can make the biggest impact together. So it's not a prerequisite to be an investor, but it's definitely an area where I'm spending part of my time. So we have a lot of good examples of that, of Justin Tuck and Tobias Harris and Kyle Lowry and Mo Bamba and Torrey Hunter, Tony Parker. These are people that want to learn about investing, but they also want to give back. So if there is a way we can help them invest wisely and also connect them with the right people so that they're making a bigger impact, That's just, even if they're not an investor, that's just part of what we're doing.
Thanks. So that's a perfect segue to Punja's question, and it says, has COVID-19 impacted your mission and investments going forward? If so, how so?
Yeah, it's definitely, it's in a few different areas. We in the last couple of months formed a partnership with Prep for Prep, and we're now bringing on our first intern for this summer. And that's an organization that's in New York that's focused on helping minority students get job opportunities and help get access to, Wall Street and private equity and other opportunities. So we kicked that off. It's always something that's been part of what we're doing, but now it's a little bit more intentional. These weekly calls where we're now engaging more athletes in what we're doing, that we ramp that up. But I think the biggest piece is working on the strategy to launch more of a workforce housing fund, where we're a little bit more intentional about how we're investing and what we're doing with these properties to help the families that live there. And we did it on a small scale. We own 2 apartment complexes in Nashville, and it's in southeast Nashville, a little bit of a lower income part of Nashville, but up and coming, a lot of jobs going to that area, close proximity to the downtown. During the pandemic, we did a few things. We bought everybody at both properties a subscription to something called Shipt, which is partially owned by Target, and it's a competitor of Instacart, but it allowed everyone at our properties to get food delivered to their apartment. And so it's normally would be $99 a year, but we paid for that for everybody. Then we had virtual pizza parties where we supported locally owned pizza shops and bought pizzas for everybody at all of our properties and delivered pizzas to local hospitals surrounding our properties. And then it was a virtual party at the same time. So everyone at our property knew not only are they enjoying pizza, but frontline workers who are dealing with COVID are also eating pizzas at the same time. And then we partnered with No Kid Hungry to pick 2 nonprofits to deliver meals to low-income families in a different part of Nashville. So we tried to find a way to help our tenants, help the local healthcare workers, help the local families, and help the local small businesses. So we had never done that prior to COVID, but so I think we were trying to be a little more thoughtful this time.
Thank you. My friend and classmate Rose Wynn has a question. She says, many companies have capitalized on business opportunities arising from this economic disruption, but future markets are still uncertain. How do you think about qualifying and creating strategic commercial opportunities in times of unpredictability, both in the short term and the long term?
That is exactly the question we have been focused on for the last month or 2 months, and we're spending all of our time rethinking everything. So, I lived in New York City. I've not been back to New York City in, April, May, June, July, 4 months. So where are people going to want to work? Where are they going to want to live? What types of office environments do they want to work in? Do they still want to live in downtowns, or do they want to move out to suburban garden style apartments? Is this going to change the way people buy homes? Are office spaces going to de-densify and everyone's going to be spaced out? Or are people going to be working from home more and offices will need less space? How is this going to accelerate e-commerce sales? So we are compiling massive amounts of data to track all of these things so that our next fund that we raise is going to specifically invest in those trends. So will people still want to work in a WeWork, in a crowded office, high dense office environment? Where will they want to exercise? Will they want to take public transportation? So these are the questions we're asking, and this next fund will be to capitalize on exactly those trends. So I don't think we have the answers yet, but that is exactly what we're tracking. And we definitely are seeing some shifts. I mean, we've already been investing in the last 10 years in the high job growth markets: Atlanta, Charlotte, Raleigh-Durham, Tampa, Orlando, Nashville, Dallas, Austin, San Diego, Phoenix. So that's where jobs have been going anyway: cost of living, infrastructure, education. So it's good. We've been in the right place. And so I think we're going to continue to invest in those markets. But I think some of the cities are going to struggle a little more right now.
That's fair. as you might imagine, the goal behind this series is to leverage experiences of folks like yourself who've already been there and who've already done these things that we want to do. So my question is, in this current socio-economic climate where people may find it difficult to maintain their sense of purpose, given the physical and emotional stressors that we're dealing with, how do you recommend that we maintain a sense of purpose in these times? How do you encourage us to push through challenging times? And how do we lead ourselves and manage high-performing teams in such a high-stress environment?
Yeah, I think it's those who are, I think, authentic and genuine about their mission and about what they believe in. I think at times like this, hopefully it kind of shines. And so I think if people believed in that the last 10 years, I think during these times, it is the time to focus. It is the time where we can be helping more people. A lot of people are struggling right now. So I think now is the time to be true to that mission and that passion. And even if it means, like we talked about earlier, it might mean making a sacrifice and selecting a career path or a job that incorporates that passion. And so I think at a time like this, we almost feel like it's time to double down, not just do what we've been doing, but it's time to do more than ever. So I would, the same way we think about it for our business, if that's what someone cares about and they want that to be a part of their life, then now is the time to be doing that.
Well, thanks, Dan. Check and see if there are any other questions here for you. On a lighter note, can you speak to the things you miss the most about Fuqua and Durham? And, are there some things are there some go-to restaurants or things you do immediately when you set foot in Durham next time?
I guess the obvious answer is basketball, but fortunately, my partner's son was on the Duke basketball team for the last 5 years, so I was able to get a few basketball games in over the years. I think what I miss the most, first of all, I grew up in a small town in Texas, and going to business school in a small town where everyone is focused on building relationships as opposed to being in a New York, a Chicago, or a Boston, I think there is a big benefit. Maybe it's not the most exciting city in the world, but that is a great place to be going to school, to be building relationships. And so I miss the camaraderie and I also miss that about Goldman. And when you leave and you make that jump, especially when you're starting your own business, now you're hiring people. So the teams that I had at Fuqua and the teams that I had at Goldman, I definitely miss that regularly.
Nice. Well, thanks for that. You make us feel like, we're going through an interesting time in our lives, and I appreciate that. Yeah. My friend Jamie has one question for you as well. She says, sometimes doubling down feels exhausting because there's so much to address. How do you combat the feeling sometimes that you're not doing enough?
Well, I think it's nice to have people around you that share your views, and whether it's your family, your friends, your investors, your teammates, so other people that share your passion, and people you can share ideas with, because especially on the investment side, most people in our industry are focused purely on real estate and returns. It's not common to be a real estate fund that is trying to, make this impact. So I think surrounding yourself with like-minded people, so you can push each other and who have similar passions is important. And just reminding yourself of your priorities. If that's what you care about, and you want that, and you want to have rewarding work. So yeah, it could be, it really was 3 years for us. And almost everyone said, at some point you're going to have to give up and go get a normal job. So we believed in it. And I think it tested us, it tested our partnership. And at this point, if we can go through that, at this point, we know nothing, no pandemic or anything else is going to slow us down at this point. So it's a journey. It's even building a business, building your brand, building your passion. It takes years. So if it's hard to find that in the first few months or however long it takes, I would just, you can never give up.
Thank you, Daniel. We have time for just one more question. And Eric wants to know, were there any lessons you learned at Goldman that have helped you to be successful since you left? Both hard questions and soft skill questions, and soft skill wise.
Yeah. I think what we learned at Goldman was you were surrounded by people that had just incredible work ethic, and spending a few years in that environment where you're just 8 or 9 a.m. until midnight, 1, 2, 3, 4 a.m., weekends, holidays, whatever it is nice to get that experience and develop the work ethic. You don't necessarily you might not need it at a place like that. Maybe some people already have that, but it made me appreciate, what it's like to work with other people that are all working that hard. And so as we build our team, yes, we want to be a little more balanced, but we do want people to work hard and have that work ethic. So I think that was a good thing to learn there. I think also what we learned at Goldman was thinking, they called it long-term greedy. And in a sense, so it wasn't all about how much can you make off an individual transaction or relationship. It was, you're in this for the long haul. Goldman's been around since the 1860s. I hope Admiral's going to be around for a long time. It doesn't matter how much we make on this next real estate deal or the next 10 real estate deals. It's about building the trust, building the relationships, and all of that will pay off over the next 10 or 20 years, because every single deal we do, there is an opportunity to squeeze a little bit more money out. And very likely no one would even realize it. But it's not about that. It's staying focused on the very long term, building the business, building the relationships. That's what they preached, and I think that's very important. I think too many people get caught up in trying to make a little bit more money in a deal, charging a little bit more fees, or maybe pushing the envelope a little bit on how you're handling a certain situation. Or there's a million ways in the business where one could make a little bit more money, but staying focused and understanding what the end game is important.
Daniel, I want to thank you for spending your time with us today. From one Texan to the other, I appreciate the perspectives you've shared. I appreciate, how you've talked us through purpose and opportunities. On behalf of the class of 2020, we thank you for coming over. I'm going to hand over to Sanyin now to close us out, but thank you once again. We appreciate you showing up for us tonight.
Thanks for having me. It was my pleasure. I told Sanyin I'm not the talker like David Robinson is, so don't expect too much out of me.
Yeah.
So Dan did tell me that when we talked, and so he made it seem like when he speaks, it's all going to be about business and strategy and operations, and that was pretty darn inspiring, Dan. You may not be the talker that David Robinson is, but you are just as inspiring. Both of you are, and I can see listening to you tonight, I can see why there's such a deep friendship and a deep partnership between you two. It's same values, same authenticity, and that's what inspires. Thank you so much for joining us. And TJ, thank you for great questions, great moderating, and to all of you for spending part of your Wednesday evening with us.
Thank you.
Thank you, Dan.
Have a great night, everyone. Bye-bye.
Everyone, appreciate it.